Summer is over, and while people have restarted to go back to the office or to school, it is time for us to get back to the search of the best and most undervalued companies on the market right now. It is why in this video, you'll find 3 of the best companies in which you can decide to invest in September of 2025. The first company on my list is the leading transportation company in the world, which is Uber with the ticker UBER. Over the past couple of years, this company that is relatively new has been able to become quite important for our society when it comes to go from one place to another. In fact, they've been able to revolutionize their industry just like another company that you might have heard of, which is called Airbnb, because in the case of Uber, they don't have any cars under their name, but they basically just connect different drivers that wants to make some money with different passengers that wants to go from one place to another. And the least we can say is that this business model has worked pretty well for them, where in June of this year, Uber had over 185 monthly active users, which represents an increase of 15% year over year, or an increase of about 10 times what it used to be 10 years ago. And this great performance has been well reflected in their number of trips that has been massively increasing to reach over 3 billion trips only in the past quarter, which represents an increase of 18% year over year. These great results have also been shown into the valuation evolution of this business since the beginning of the year, where the stock has gained close to 40% of value. Nevertheless, what is pretty interesting is that despite this great financial performance, the company would still have a lot of room for growth and would still be quite undervalued with a PE ratio of only about 15 right now, as well as some excellent growth forecasts that are predicted by many analysts. Add to this, if they are able to keep their dominance into the ride-hailing market, where they currently own over 76% of this growing market, this should definitely help them to fuel more growth over the next couple of years, knowing the fact that they also hold one of the largest food delivery brands in the entire world with Uber Eats. Now for the second company that I currently have on my watch list, it is quite a smaller one compared to Uber, but it is the Canadian business Cargojet with the ticker CGT. As being a global leader when it comes to providing time-sensitive overnight air cargo services, Cargojet is only worth about $1.5 billion, which is about 10 times less compared to Uber. With a fleet of about 45 aircrafts, which are mainly some Boeing planes, Cargojet makes sure to transport from one place to another different goods and mail either on dedicated cargo planes or in the holds of passenger planes. And so by operating over 15,000 flights per year, they are able to connect the different important Canadian cities such as Toronto, Vancouver, Montreal, and Halifax, while being also able to cover important other international markets such as the US, Mexico, Europe, and Asia. It is also important to note that some of their biggest clients include companies such as Amazon, Post Canada, and Purolator that will use their services to deliver their goods from one place to another. So basically, let's say that you want to go shop and buy something on Amazon and that you want to receive it quickly with Amazon Prime. Well, there are good chances that the method of transportation that will be used will be throughout cargo airplanes, because one of the big pros of planes is the fact that they tend to be quite quicker compared to trains or boats. What also makes this company pretty interesting from an investor point of view is the fact that it is currently trading at some super low valuation with an extremely low P ratio of less than 15 right now. And at the same time, just like for Uber, this company seems to have a lot of potential for growth over the next couple of years according to the analysts. But what will be essential for them to fuel this growth over the next couple of quarters will be to complete great acquisitions and great partnerships. One of their latest important partnership occurred about 1 year ago in June of 2024, where they've agreed for a 3-year partnership with the company Great Vision HQ Express to fly at least 3 weekly charter flights between Hangzhou in China to Vancouver. However, we've seen that the airplane market as a whole in Canada hasn't been able to perform well for the past year, where a company like Air Canada as well as Cargojet have been plummeting in terms of their valuation. Add to this, their latest earnings report hasn't been that great, even if they've been able to slightly increase their total quarterly revenue and their total quarterly adjusted EBITDA. The positive news, however, is the fact that they are also distributing a certain dividend income to their shareholders that is however slightly over 1%, but with a dividend payout ratio of only about 15%, it means that over the next couple of years, this dividend could be massively growing if the company is able to see some great growth. However, even if this company remains on my watch list right now, I still keep a certain reserve when it comes to investing in it because I'm waiting for their next earnings report that will be coming over the next couple of months. Finally, the third and last company on my list is the famous company Alphabet with the ticker GOOGL. If you followed my channel for a long period of time, you must know that this is one of my favorite companies that I personally consider as one of the best and most diversified tech companies in the entire world. But do you know what is even more interesting about this company? It is the fact that despite a recent surge in their valuation following their great earnings report, I personally believe that it is still quite undervalued compared to some of the biggest technology companies with a price to earnings ratio of only about 25 right now. So even if this company has gained close to 20% of valuation since the past month, there would still be some potential room for growth for the next couple of quarters. Talking about quarter, when we look at their latest earnings report, we can see that despite being a $1 trillion company, Google still finds ways to innovate in their business model to grow their different business segments, where we've seen that they've been able to massively increase by close to 14% their total quarterly revenue to close to $100 billion, where on their side they've been able to grow their total net income year over year by about 20% up to $28 billion. To me, it is absolutely mind-boggling to see a company like that is close to surpass over $100 billion of quarterly revenue over the next couple of quarters. But at the same time, it is not that surprising when we look at their great business model, including products such as YouTube, Chrome, Gmail, Waze, Google Pixel phone, and their dominant search engine, which actually represents about 90% of the total search engine market. Plus, with the AI revolution that is knocking at our door, Google is currently well placed at the forefront of the competition when it comes to that with their Gemini AI model, as well as their big investments that they've been making lately when it comes notably to building new and big AI data centers. It is why this company will definitely remain on my watch list for the month of September, and it will also definitely remain in my portfolio. But talking about my own portfolio, if on your side you're looking to find what are the different individual companies and ETFs that I personally have in my investment portfolio, well, check out the video that's gonna be right over here, and I will see you soon. Peace.